This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, a very good afternoon across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. Carol Massar, Tim is off, and joining us right now is Bloomberg News' credit reporter, and you kind of do so much to say. At least.
Yes, but my title is credit reporter, and it's been a year in credit, and we have a lot of moves today that we're going to get into in this show, but it is a macro day as well, Carol.
It is indeed. Emily Grafeo along for the next 3 hours. It is Fed Wednesday, August 19th, 2026. We do get the Fed minutes in just a moment, just a few seconds. This says Wall Street staged a rebound after the Treasury said it plans to boost buybacks of longer-dated bonds, a signal that the U.S. wants to lower borrowing costs after yields hit multi-decade highs. Let's head to the Federal Reserve and those latest minutes and Michael McKee. Mike.
Well, Kevin Warsh was right. The minutes do suggest there was a bit of an old-fashioned family fight at the July meeting as participants argued over the outlook for inflation and monetary policy. Two lines of general agreement stand out. Many participants assessed that policy tightening would likely be necessary if inflation did not decline. Now, remember, this meeting took place after the June CPI report that showed inflation had declined more than anticipated. And participants judged that their inflation outlooks were highly uncertain and that inflation risks were skewed to the upside. Many participants noted that the recent re-escalation of the conflict in the Middle East significantly clouded the inflation outlook. Inflation was first and foremost in the debate, and the committee's counting words show a lot of division. Several participants noted that price increases over the past year were broad-based, and some said underlying inflation appeared to be elevated. AI spending had also been subject to price pressures. But inflation expectations remained contained, and most participants anticipated inflation would step down over the rest of the year as the effects of tariffs and earlier energy price increases wane. But again, many participants noted the possibility that inflation might be more persistently elevated. Several noted companies had accommodated price increases by compressing margins, but they suggested if the Middle East conflict went on, they might have to raise prices, while a couple noted that business contacts judged consumers would resist those price increases. They also disagreed on the impact of AI at the moment, with some noting its inflation risks in the short run, while some also said AI productivity increases would cancel that out. In the end, most members agreed to hold rates at that meeting under the assumption that additional data before September would offer more clarity. And speaking of additional meetings, Chairman Warsh suggested 6 scheduled meetings per year to the committee, held roughly every 2 months, saying that would allow more information to accumulate between meetings and provide policymakers and staff with more time to consider what he called strategic policy issues. Warsh asked for input from the committee, and no decision was reached at the meeting other than there would be no changes made this year.
All right, Michael McKee there at the Federal Reserve. Mike, you're going to stay with us. I'm just looking quickly here in terms of market reaction. A little bit of a lift to the equity trade. I did see the S&P up about 22 points ahead of these Fed minutes. They're now up about 32. The NASDAQ 100 was just down a fraction of a point. Now it's up about 2.5 points. And let's go on over to what we are seeing in terms of U.S. Treasury yields. And we have seen a little bit of a dip lower. So where's that 2-year note right now? 4.18, 5-year note with a yield of 4.35, and you've got that 10-year note with a yield of 4.65. Mike, interesting. First of all, 6 meetings by the FOMC would be 2 less than what's on the calendar currently. What's sticking out here for you following the latest Fed meeting? You were there in the room, put a question to Kevin Warsh, Fed chair, that many thought was really smart in terms of, like, what are you watching to figure out kind of where we go next? But tell us, based off of these minutes, if you got any more clarity about what the FOMC is thinking.
I think what the minutes show is that the committee was much more divided than people had anticipated. The counting words that they use, the adjectives for how many people were on one side or another are much more in evidence in this set of minutes than I think I've ever seen, and especially the words some and several. Sounds like basically there were people who had opinions on a whole range of things that were expressed, which Warsh said he wants to see, but it didn't suggest at this point that they have any kind of unified view about what's going to happen in the future with inflation. They did say it's very uncertain at this time. My thought was that 3 weeks ago, when this meeting took place, they might have still been leaning towards the idea of a September rate cut. Now we've seen some changes to that view since then in the markets, but this was a somewhat hawkish group of people who were concerned about inflation and the fact that they didn't know what was going to happen.
So, Mike, we're likely to hear from the Fed again in just a week from now at Jackson Hole. Now that we've looked through the minutes and we have maybe a little bit more of an understanding of how they're thinking about inflationary pressures and the health of the economy, does it inform us at all about what we're going to hear next week?
I don't really think so because of the stance that Kevin Warsh has taken about not giving any kind of forward guidance. I suspect that he might offer a little bit more in terms of what their framework for monetary policy is, what's their reaction function, and he may outline more about what he's trying to do with his task forces and reforms at the Fed. And then finally, maybe some more comment on how many meetings they might have. But I don't think the markets are going to have a takeaway that the Fed is going to do this or that in the way that they have after some chairman's addresses there.
What's not answered for you, Mike, in these minutes? Like, we always get more detail, right, of what was going on at the meeting. But what is really missing here for you still?
Well, I don't think we get a real clear view of what's going to happen ahead. There was general agreement that if inflation doesn't come down, they might have to raise rates. But there was also general agreement that the inflation picture was extremely cloudy. They said in the minutes that they were hoping the fact that they would have 2 CPI reports, 2 PPI reports, 2 PCE reports before the next meeting would give them more clarity. And I think that's still where we are today.
And Mike, just your reaction today, pivoting away from the FOMC minutes, but on this news of the Treasury and debt buybacks.
It's all kind of related. But I'm just curious, Mike, you know, the Treasury does this, but the size and the timing of it is super interesting.
Yeah, the size is very small compared to the size of the overall Treasury market, and it isn't going to have much of an impact in and of itself. It's more of a signal from the Treasury that they don't like the direction interest rates have been going in, and they might try to convince markets not to push up rates so aggressively. Whether that works or not, we'll have to see. A lot of short covering today, according to the bond strategists I've talked to. But what we're seeing is the Treasury using one of its tools, and that is the maturity curve, to try to control what might happen. Buying more at the short end and buying back fewer at the long end gives some more, buying back more at the long end gives more money into the system so that people can buy more bonds. But the maturity shift does put some risk into what they're doing. What's interesting is also Scott Bessent was very critical of Janet Yellen for doing the same thing when she was Treasury Secretary, and now he finds himself doing it. And I guess the kind of the bottom line here for the Fed is that if you want to bring down lower rates, one good way to do that would be to raise short rates, because then that gives the markets more credibility for the Fed on inflation, and that could bring down the long end.
So do as I do, not as I say? Is that what that is? I don't know. I'm not sure.
Well, you can imagine Kevin Warsh going to the White House and saying, look, I raised rates, but mortgage rates are coming down because the 10-year is lower. So I gave you what you wanted in a different way.
Yeah, let's be happy about this. Hey, Mike McKee, thank you so much. All over this. Obviously, the Fed minutes and then headed off to Jackson Hole soon. Mike, thank you so much. Michael McKee, he's Bloomberg TV and Radio International Economics and Policy Correspondent. He's there at the Federal Reserve in D.C. You can read all about the Fed minutes. You can find it on the Bloomberg and at Bloomberg.com. I got to say, we want to stay on this, and we're going to even dig deeper into the entire macro. We're going to do that in the 4 o'clock hour with Jim Caron. He's CIO at Morgan Stanley Investment Management, again, in our 4 p.m. hour. But we want to know more right now. Mike's setting us up so well. Joining us once again is Karen Veraa-Perry. She's head of US iShares fixed income strategy over at BlackRock. Joining us from San Francisco, massive firm. You know it so well. They've got $15.3 trillion in assets under management. That's as of this end of the second quarter. World's largest asset manager. Hey, good to have you here with us. Excuse me, the FOMC minutes. Anything of note for you?
I think it was really interesting that the whole market is looking at the minutes today, and they're trying to decide. We had 3 dissenters last meeting. What was the discussion actually like? What is the Fed really thinking? So for me, when I looked at the summary real quick, I was just thinking they're probably leaning closer to actually hiking rates, and there was a lot of uncertainty to note in the minutes. And so I think that really opens up the path of rates in different directions, and I think that's why we're seeing so much scrutiny of every little piece of language, is we're just seeing how the Fed's going to react to this cycle.
And Karen, what do you make of the Treasury moves today? Because it's interesting, the minutes suggesting a maybe more hawkish Fed than we had previously thought, but the 2-year yield actually moved down a little bit. And then, of course, the long end moving down quite a bit today, but still at elevated levels. What's really driving the yield curve right now?
I think your point on the 2 years is quite interesting, because I saw the Fed funds futures and they didn't really move much after the minutes. I know we've only had a few minutes to digest, but that 2-year point is really driven on where we think the Fed's going to go. So if we're on hold for a little while, we could see some more steadiness there. But then if it backs off a little bit, we could see it go down. And then I think the actions today with the Treasury buyback program are really a signal to the market that we're trying to put a lid on long-term interest rates. And then we saw the 20-year Treasury auction came out earlier today, $16 billion printed. Mm-hmm. And I think that we saw some strong metrics there on that 20-year auction, keeping it around 5.2 on the coupon. So I think that was their signal to the market, saying that we're not going to just let this run. We're going to put a cap on rates, and we're going to do that with our buyback program.
Well, have they talked to the hyperscalers who keep issuing, and tapping the credit markets? We had a great story on Monday, Karen, that just got into this whole idea of the constant issuance from all of these big tech firms tapping the debt markets, and how that might be crowding out potentially, some of the Treasury trade. What is your position on that?
We've just seen a lot of, to your point, crowding out, where there's a lot of people looking for yield, looking to term out some duration. They could do it with some of these hyperscaler long duration corporate bonds, as opposed to going with treasuries. We've actually seen this quarter $6 billion coming into TLT. That's our 20-plus Treasury ETF. So when we've seen levels hit over 5% in the long bonds, we do see some people coming in and buying them via the ETFs. We've seen a couple other trades in our STRIPS ETF, GOVZ, and even one of our 2056 I bonds, some pretty big trades coming in when it hits at levels. And then more broadly, with adding duration to portfolios, we think long-term munis is another interesting way to do it. And that's really performed well this year, with long munis up 4% year to date, where we've seen long treasuries are down 3% year to date on a total return. So I think there's some ways to add duration in portfolios very thoughtfully in this market, as we're seeing yields come back up.
Go back to flows, because we always love talking with you about this. You said, you guys have had a pretty active month, right, so far in August, in terms of money going into, in particular, longer term bond funds?
Yeah, usually it's pretty sleepy in August sometimes with people on vacation, but I think this month people are paying attention, and whenever we see yields tick up, flows coming in, as I mentioned, to TLT. Mm-hmm. Overall, government bond ETFs have seen almost $90 billion year to date. So I think a lot of people are using ETFs to tap this part of the Treasury market. Other interesting things that people are doing across the curve, we're just seeing a lot of interest in inflation-linked bonds. That's been a big topic this month. You can get real yields of 3% plus some inflation protection. So we've had probably an uptick in inquiries about tips this month because of that.
So you mentioned, the 5% level. Do you think that level holds? That there is a moment, where treasuries do become attractive and buyers step in? Because a lot of people this morning were talking about bond vigilantes, and the push and pull there with the government. But do you think that there is, demand here for yields at this level?
I think so. I think a lot of liability-driven accounts, this helps them immunize some of their liabilities. I think there's a group of people who do think rates are going to come back down or tick back down. But I think we're in an environment where there's a lot of uncertainty with inflation, and that's going to call for at least the term premium being positive around these levels for a little while.
So, what's the risk here? I just feel like, Karen, there's just still a fair amount of uncertainty. And I just feel like in terms of indications of what the Fed does, whether it hikes rates, cuts rates, now we're having part of the narrative, an expectation that maybe it's later next year that we're going to see rates cut. But there's still so much that comes out of the White House in terms of tariffs, more tariffs, less tariffs, backing off, going forward, a war that sends energy prices higher. Help me understand what matters, you think, most to what we see in terms of yields, whether it, and I'm curious what the tops are that you're watching for something like the 10-year.
Yeah, I think for a lot of people, don't get deterred by a lot of the geopolitical headlines and even specialized events like today with the buyback program announcement. I think right now in this market, yield is your best friend. That buys you as we see price volatility in rates and treasuries. Look to add income to your portfolio. So we're helping people look, beyond government bonds into corporates, even going global. And if you can add 5 to 6% income to portfolios, you can buffer some of these treasury movements that are happening, or you can just not play this game. We're seeing a lot of interest in intermediate bonds, people sticking to under 10 years. We actually launched a 1 to 10 year treasury ETF earlier this year. The ticker's GovM, so GOVM. And we're seeing people just cutting out the long end of their portfolios. I don't want all the volatility. I can still get 90% of the yield pickup by going to more intermediate bonds. And so that's really what we would coach people on. Think about the long-term strategy. There's going to be some volatility in fixed income, but add some yield. That's going to buffer out some of these price movements we're seeing.
Hey, what about in credit? Because a lot of these hyperscalers are issuing super long-dated debt. We're talking 50, even I've seen 100-year debt. Is that attractive to clients right now?
I think there's definitely some clients who are willing to buy out that far because they do want to lock in yields for a certain amount of time, and plus some of them want access to the names, like they feel very comfortable with the underlying issuers in the market. But we would just say stay diversified. Don't put all your eggs in one basket. And we have seen credit spreads historically are still at very tight levels on IG credit. So we're seeing people move away from IG credit to some securitized sectors to add income. And so that's been a trend that we're seeing is people aren't just going to credit, they're looking for maybe other sources of income outside.
All right, just 30 seconds. So, we've all been coming in on Monday and concerned about the move up that we've seen in global bond yields. And there's concerns whether it's the war, higher oil prices, government spending more than they're bringing in. You're not concerned about that overall pushes rates higher, and in particular in the U.S. And again, just got about 25 seconds here.
Yeah, I think it's definitely something we're watching. We don't want to be overexposed to any single risk factor, and so I think that there's definitely an argument for staying really short. And if that's what you want to do, we've definitely seen a lot of money coming into ultra short exposures, like our SGov ETF just hit $100 billion, as people are just hiding in cash and avoiding all the volatility.
Perfect guest to have on what we call a Fed Day, Fed Minutes Day. Karen, thanks so much. Be well, be well. Karen Veraa-Perry, she's head of US iShares fixed income strategy over at BlackRock, joining us from San Francisco. We got to talk Bitcoin, a meeting coming up at the White House. That's all to come next.
It's 2:21 on Wall Street. I'm Amy Morris. We got the Fed minutes from July's meeting. Several Fed officials favoring an interest rate hike last month, many indicating that policy tightening would be necessary if inflation does not decline. The FOMC voted 9-3 in July to hold rates steady, some officials dissenting in favor of raising rates. Participants' inflation outlooks were described as highly uncertain. Stocks and bonds rallied after the Treasury announced it would increase U.S. bond buybacks to stop the surge in long-end yields. Treasury plans to add additional liquidity support for its buybacks of longer-dated debt, causing a sharp rally across assets. The ramped-up buybacks are set to begin September 9th. The 30-year Treasury yield is now at 5.2%, and we do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.25%, NASDAQ up 0.1%, the Dow up 0.25%, the Russell 2000 index up 0.5%, 10-year Treasury yield at 4.66%, and the 2-year yield at 4.18%. Crude oil also higher. WTI now more than $86 a barrel. Brent crude is just shy of $92 a barrel, so a little bit off session highs. Marvell Technology entering into a commercial agreement with Google to develop custom semiconductor products. Marvell issued Google a warrant to buy up to 58.97 million shares. Shares of Marvell nearly 8% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Masser and Emily Grafeo.
All right, got it. Amy Morris in for Charlie Pellet. Amy, thank you so much there with a check on the market. Speaking of things we're watching, Bitcoin.
It's up.
It is $68,253.93.
Up today, Carol, but down a lot, erasing all of its gains, its post-2024 election gains.
It is true. Like, you've got to look and get some perspective, right? It is today rising, I think, the highest level since early June. But you're right. You got to go some perspective and you realize how much it's come down. What's interesting is we are monitoring the White House because we do expect a meeting. There's some regulatory optimism, industry officials gathering at the White House with President Trump. We're talking about well-known folks in the crypto industry, and this is after the Senate punted a vote on its top legislative priority. The meeting perhaps giving the industry a chance to tee up lobbying ahead of the Senate's planned vote next month on the Clarity Act. It's not been an easy road towards this. So at stake, a lot for the industry. Let's get more on the backdrop, kind of where we are and what we're watching out for as the president gets ready with this meeting. With more is stacy-marie Ishmael. She is senior executive editor at Bloomberg News, has covered crypto a lot, knows this world. It does feel like there's a fork in the road here in Washington when it comes to crypto policy. Give us a little of the backdrop here for this meeting, Stacey.
I mean, what the crypto folks will say is that even if there's a fork, like, everything's looking better than it was under the previous administration, right? So what's happening right now? We have this big meeting that was scheduled about, it came together. We have various lobbyists. We have executives from Coinbase, Kraken, blockchain.com, meeting with representatives of the White House, expected to have attendees from the SEC and the CFTC. This comes on the heels of a series of statements yesterday from the Securities and Exchange Commission about their own attempt to undo what they described as the excesses of the previous admin when it comes to the approach to regulating crypto. So is there any actual news? Not yet, right? Like, what we have, crypto runs on vibes a lot of the time. Like, the one thing that is certainly true is just the way the market has been structured forever is, like, sentiment is a really huge part of prices. And I think the past couple of days, you see this in the performance of the Bitcoin prices you've mentioned, but also some of the individual stocks and shares. So, you look at the Coinbase share price, for example, pretty big rally today. People are reading positive energy into this meeting, reading positive energy into this, like, very explicit affirmation from the SEC that they want to find a path forward for crypto. I think there is...
But the enthusiasm's down a lot. I mean, crypto, Bitcoin down 45% since October
certainly the
of last year.
retail buying has been down. There hasn't really been a lot of tailwinds kind of driving this positive story. And, our colleagues have been covering very extensively the withdrawals from the biggest ETFs as they relate to Bitcoin and other tokens, kind of just like the retail investor sentiment has not been positive. And so I think there's also the two other factors are crypto has had to compete a lot more with the AI story, right? And you've seen a lot of those folks be like, both the crypto companies themselves are talking about, well, we want to expand into AI data centers, or we're going to have prediction markets as a part of the thing. So in addition to the AI story, you've had prediction markets kind of taking some of the same air among those retail investors that crypto had otherwise dominated.
Okay, so remind us again what exactly these executives are potentially going to get out of today's meeting? Because they're meeting at the White House.
Yep.
There is regulation up, at stake that would be coming out of Congress. But then you also have the SEC lingering in the background and like other potential developments coming out of the SEC. What is really the focus? What would be the tailwind coming out of this meeting?
I think it would be some kind of explicit affirmation from someone able to speak on behalf of the president that getting the so-called Clarity Act passed remains a top legislative priority. Because that is the thing that the industry, it's called clarity because the thing they spent the past 5 years asking for was a regulatory clarity, and some wit in the Senate was like, hey, we've got a great name for a bill.
It's all about marketing.
Like the Genius Act.
Yeah, so
Yeah,
I think
exactly.
what folks who are lobbying, what folks who are executives are really looking for is, that real sense of executive approval and endorsement for this thing that continues to elude them. Because if you remember, we've been talking about the Clarity Act for a long time.
Right.
And the hope and dream of a lot of folks was that it would get, at least debated, if not passed, by the August recess. That deadline is now gone, and so now we're looking at the next earliest possible timeline being in September.
Stacey, how is it complicated by President Trump, his own involvement, his family's involvement in this sector, and how has that kind of slowed everything down?
So the Trump family
and
has
could
said,
still be a problem.
The Trump family has said, the president, the sons, everyone involved has said over and over that the fact that they are significant investors in the crypto universe does not pose any kind of conflict of interest to the White House. But the reality is, at least from a financial benefit perspective, that they have as a sort of a universe, a family, profited significantly from early investments in different forms of, crypto, whether it's exposure to world liberty or, the eponymous presidential token, right, Trump coin,
right.
Or the token issued by the First Lady, like Melania coin, right? There have been a lot of different kinds of investments. Trump was also very early on having NFTs and collectibles. So there's been this very long path of, either the president himself or people in close proximity to him, like being able to benefit personally from their crypto investments in a way that has not necessarily translated into, those profits being kind of distributed to retail investors in the way that retail investors might have hoped. If you held on to Trump coin or Melania coin, like the chart looks worse than the chart of Bitcoin,
Right.
from inception. So people are sitting on either actual or paper losses in a pretty significant way. So that's the first thing. And the second thing is, critics of these investments, particularly on the Democrat side of the House, and in some cases there's been more bipartisan criticism of this, have said, well, this White House appears to be lobbying for one particular outcome, and that has definitely changed the dynamic of some of these arguments, because going into maybe 2024 or 2025, there was certainly more of a feeling on the Hill that, crypto could be an engine of financial democratization. It was something that could benefit, a more widespread group of people, whether you feel that was true or not. Like, that was a little bit more of the story. And now it's become really tied up into this, like, are you a pro-Trump or are you anti-Trump? And your feelings about everything related to that seem to be more of a referendum on, like, your political stance rather than on the asset itself.
Yeah.
Well, you mentioned the word hope and how, like, initially there was a lot of hope from the retail side that this was going to be, something good for them. And I think you can see that reflected in the Bitcoin price.
Yep.
We were talking about how after the 2024 election, Bitcoin skyrocketed, and now it's erased all of those post-election gains. I'm just wondering, like, to what extent do you think the family's involvement in this sector has been the driver of, like, what has dented this hope and this optimism?
I mean, it is a mug's game to make predictions about about untangling correlations in markets. But
I'm going to use that phrase. I like that.
I think it is certainly true that retail sentiment was not helped by the perception that they were unable to make money at a time when very significant either like industry participants or particular families or people associated with particular families seemed to be able to profit in a way that was not accessible to them. But simultaneous to that, you had the rise of the AI trade and you had the rise of prediction markets. And so it's very hard to untangle like the significance of any one of those as the reason for prices being where they are.
And I know a few folks here have talked to the likes of Eric Trump. I have too. And when I brought that up about just kind of the connections of having a father in the White House who's dealing with policy and legislation, then a family business, very defensive, I think it's safe to say. But it's an interesting times. We talk about the people who are there: Coinbase CEO Brian Armstrong, Cody Carbone, CEO of the Digital Chamber, the CEO of the Crypto Council for Innovation, Summer Mersinger, excuse me if I mispronounce, CEO of the Blockchain Association. These are expected to attend. What's interesting is there was a lot made out, I feel like in the last 24 hours, that the folks in the prediction market were not going to be there.
Right.
Should they have been there?
I was just watching while I was in the green room, former New Jersey Governor Cristiano expressing very strong feelings about...
He thinks no.
He is definitely not into the prediction markets being present at this. This is a hard conversation to untangle because, again, some of these companies, I think about like Robinhood as an example, who are diversifying into, different elements of putting stuff on the blockchain, let's say.
Right.
And the kinds of people who have an understanding of what a stablecoin is, the interest in creating one of these accounts, the savvy to want to make positions on prediction markets at bigger and small sizes, typically overlap very strongly with people who have crypto positions in one or more assets. And so there's certainly a competition for the user base, in addition to the fact that some of these crypto companies, we mentioned the crypto miners who started to get more into AI as a revenue stream, or the crypto companies that are looking at prediction markets. The lines are getting very blurry, right? It's like where does one of these start and the other one end? You think about, let's say Polymarket, so-called in part because it was like based on a token that was on a blockchain, and had these like very strong like blockchain roots, right? So it's hard to separate them out. I think that the focus of this meeting is likely to be around, can we at least just confine the discussion to the part of the House we really care about, which is the Clarity Act, and the proposals that just came out from the SEC, the other proposals around the CFTC, because you add prediction markets to that and suddenly you get into, well, how would you regulate them? Like the CFTC has very particular positions on this. States attorneys general have very different views on that. So, I do think from the perspective of the crypto CEOs and lobbyists, it does risk confusing the conversation at a time when they really want focus.
What about lawmakers, though, in terms of where they're, obviously they could have signed off and made it happen. They did not. So they'll come back in the fall. But, what is it that concerns them most? I'm assuming for Democrats, it's the ethical concerns or conflict of interest. But are there other issues? I think I had seen something about kind of the banking industry, banks and the cryptocurrency industry clashing.
Yes, there have been some famous disagreements between the crypto companies and the banks.
Well, so, they talk about, let's see, whether a certain class of digital assets can pay out a yield to customers.
Right. So that was, if you are a certain kind of bank that depends, if you are most banks and you are depending on people, coming to you with deposits, you worry that if they are able to generate yields, people are very careful not to say interest when they're talking about crypto accounts, but if they're able to generate yields on things like stable coins, then the incentives for them to have whole deposits at your banking institution is less, right? And so that was certainly one of the sources of tension, which is like a very real kind of competitive threat, and various types of banking lobbyists, both in the US and elsewhere, have strong feelings about this. And then you have, banks that I would say rely less on deposits. So, let's say like JP Morgan and Jamie Dimon, who, from their own perspectives, also don't necessarily want to cede potential territory to these crypto companies. And we've had a lot of really good reporting from our colleagues on that. So I certainly think that's one element of it. The lawmakers are sort of balancing their various, shall we say, constituencies. One of the other things that's very different right now, and it's very much to your point, Emily, crypto isn't necessarily winning elections in the way that it was perceived to be on the heels of 2024 going into 2025. I think there was a headline that was coming across the wire just as I was getting here, which is, there was a race in Florida on which Fair Shake, which is a political action committee very strongly tied into crypto, spent, a couple $1 million on a race that did not go their way. And that is a very different outcome from what we saw in kind of previous rounds where it looked like candidates that were backed by crypto had all of the momentum. So it's unclear right now, just based on what we're seeing, that, at a time when folks have midterms on the brain, that crypto is necessarily a priority for them in the way that, say, affordability or gas prices might be.
We're talking, of course, with stacy-marie Ishmael. She's senior executive editor at Bloomberg News. Carol Master, along with Emily Garfeo. We are awaiting a huddle of crypto executives and lobbyists at the White House today with President Trump and officials. The industry regrouping after the Senate punted a vote on its top legislative priority. We've been talking about the Clarity Act. We want to bring into the mix also Jeff Mason, Bloomberg News White House correspondent. Jeff, we're awaiting the president. He's running maybe a little bit late, but that sometimes happens, gathering of folks. This is an interesting issue, and it's something we talk about a lot at Bloomberg. Actually, we're going to wait for Jeff. But Stacey, I want to come back to you, actually, because the ups and downs that we've seen, you go back 10 years, how many years, when all of this...
Bitcoin's a teenager now.
Exactly. And it's certainly the value has gone up substantially. Maybe it's way off its highs. But even the establishment and the traditional folks, the bankers, you mentioned JP Morgan, and when everybody was shunning it in a big way, and everybody looks at it or is definitely much more involved in the digital cryptocurrency world.
Yeah, I mean, I'm not trying to make fetch happen, but the phrase digital finance is, I think, emblematic of what we're seeing in terms of why institutions are interested, right? Which is, if at the most fundamental level, Emily, our favorite phrase, the underlying technology of crypto, the blockchain, is
which always makes sense to me. It's the other stuff that doesn't.
Yeah. It's
the layers.
It's a way to record transactions.
Yeah.
And is it the fastest way? No. Is it the most energy efficient way? Not necessarily, but it is certainly a way that is increasing in popularity as banks and other financial institutions around the world think about, well, if we want something that is available 24/7, that is pretty reliable, that is globally accessible, this is a technology that makes sense. And that is where a lot of the conversations that are happening, including with JP Morgan and other major banks, is around, well, how can we use this underlying technology to, record certain types of transactions or make certain types of assets available or build certain types of products on top of it. And that is, for them, a much more potentially interesting place to deploy capital and talent than just on a Bitcoin specific product, right? Because it's much more scalable. You get into different kinds of discussions around payments, which everyone is obsessed with, including me.
Yeah.
You get into
cut out the fees and I'll be very happy. No, but you do think about the layers, right? That these traditional financial firms and big banks, right, make an awful lot of money on the layers along the way.
Well, there's certainly layers, but it's also things like, if you've ever tried to move money from one country to another on a Friday afternoon, not necessarily straightforward or even possible.
Right.
So I think that idea of what can we build on top of this technology has been getting a lot more attention than in, say, 2022, 2023, when people were really paying attention to individual token prices, and the price of Bitcoin set the tone for the entirety of the market. We've seen with stablecoins that a huge overall element of crypto, not necessarily the most glamorous, right? It's designed to be boring. An effective stablecoin stays at its
Right.
price, but has lots of interesting use cases, and that I think has also changed the conversation. And in ways that retail is like, you're not going to make money speculating on stablecoins, so that's just not what they're
$1, 1 cent.
It's not the idea.
Yeah.
We're talking with Stacy-Marie Ishmael. Let's bring into the mix. We've got Jeff Mason now, Bloomberg News White House correspondent. He's there in our DC bureau. Jeff, we are awaiting the president, expected to be surrounded by crypto execs and lobbyists. Top of mind for you. I mean, this has been, it's a personal issue, obviously, with the Trump family certainly involved in this space. But a lot of folks are watching to see what the next step is in an industry that we have been talking about for many years here at Bloomberg.
Absolutely. And it is a personal issue, but it's also a policy issue for this administration and for this president, and he is certainly very interested in that. Some critics, no doubt, would say that's in part because of the personal interest that his family has. But it's also an acknowledgement of the fact that this is a president who is very present with regard to policies on financial markets, including the newer ones like crypto.
Yeah, Jeff, talk about, what would a win look like for Trump? Because we're with Stacy-Marie Ishmael. She just pointed out that Bitcoin right now, and, being a digital asset proponent, it's not exactly an election-winning strategy, just given the sentiment right now in the industry. How does Trump kind of navigate those dynamics?
I have to laugh a little bit at that because a handful of things that the president cares about are not exactly election-winning strategies. Certainly his focus right now in Washington on remaking the White House and a helipad. He took the press pool out earlier today to look at it, or the Kennedy Center, or getting rid of the East Wing. Those are things that are not polling particularly well, and they're not exactly what the Republicans in Congress would like to have President Trump focusing on. All of that said, that I think you could also apply that to some of his policies with regard to financial markets. The president makes a point regularly of talking about how high the stock market is and how good that is for 401ks. But data shows that there's a good chunk of Americans who don't have their money in the stock market. So though that rise is certainly helping a lot of Americans, it's not helping everyone. And I think that analogy is also appropriate here. The crypto market is one that plenty of Americans will look at and say, I don't get it. I don't understand it. I don't have anything to do with it. That doesn't mean there aren't a whole bunch of other people who do, but it's that important middle that in politics ends up being critical when it comes to elections, including the midterms a few months from now, but also the presidential in 2028.
We're talking with Jeff Mason and Stacy-Marie Ishmael of Bloomberg. Stacy, it is interesting, though. I consider when I'm listening to Bloomberg in the morning, prepping and getting ready for, the day, and we quote Bitcoin as a sign of risk on, risk off. This has become part of the financial market establishment in terms of as a market indicator. And I think that's kind of interesting. I think it's actually fascinating. What I'm wondering, though, and I want to throw something else into the mix, the midterms. And if we see Democrats have more leverage, there's a great story by our Bloomberg government team that Democrats are preparing to unleash a deluge of investigation into President Trump's crypto connections if they retake control of Congress in the November midterm elections. It's just around the corner. Who knows? Prediction markets will tell you who they think is going to win. But having said that, is there a thinking, do you hear that if Democrats have a lot more leverage or are in power come the midterms, that it will be a major setback for the crypto industry? I
certainly think, there was a really interesting statement put out by the SEC chairperson yesterday on the heels of this, here's our regulatory approach to crypto. That was the language that it used tried very hard to make clear that what the SEC would try to do under this administration was essentially the absolute opposite of what that regulator did under Chairperson Gensler and the Biden administration. And I think that it is hard to uncouple the idea that the industry has that if Democrats crypto regulation will be what they perceive as onerous and punitive, and that will be like a net negative for the industry. But under a Republican administration, especially a Republican administration that is, explicitly trying to deregulate lots of different industries, like that is much more likely to be a positive for them. And so I don't know the extent to which someone who is currently able to cite down to the decimal point what they're paying in like energy is paying the same amount of attention to like this existential debate over crypto regulation. But I do know that, there is still a perception, particularly among execs, that if they want to continue to have the kind of runway that they have had so far, ensuring some kind of Republican continuity is really important for them as an industry.
And just remind us, because we are talking about, a pending piece of legislation, the Clarity Act. When I think about it, the central issue here is SEC versus CFTC. What's a security? What's a commodity? Who's regulating what? Why is that so critical? And again, it doesn't really seem like something that an everyday voter would care about. But why is it so critical to the industry that has been existing in the country without clarity for quite some time now?
We will never beat the gigantic nerd allegations, Emily. So for a long time, particularly under, the previous regime, crypto companies would say, we don't know with whom we should register. We don't know what we're allowed to do. We don't know if we issue a certain kind of contract, whether we're going to get smacked by the SEC or the CFTC or both. We don't know who's going to sue us. Because it's, there wasn't sort of a bright line. And that is, again, going back to the genesis of this idea of the Clarity Act, they're really looking for a bright line. How are we investment contracts? Are we commodities? Is there a shared understanding at the federal and the state level? And I think that is very much the hope that, in this we're all friends here approach, the both the SEC and the CFTC are arguing, don't even worry so much about the bright line. We're just not trying to come for you in the same way that the industry perceived to be under, in their terms, like under attack for trying to go about their daily operations.
We are awaiting a meeting with crypto executives and, as we've been reminding everybody, lobbyists gathering at the White House with President Trump. That's a live shot. We are waiting President Trump, to step up to the podium. They are expected to talk. We'll see what the initiatives are, what the priorities are, and what we hear from the president. I want to go back to you, Stacey, because you mentioned SEC Chair Paul Atkins. This was that post yesterday on X, and he said, given the progress made in Congress to date on market structure legislation, let me be clear up front. Legislation remains indispensable to enacting, quote, future-proofed rules of the road that are durable enough to protect the work we are undertaking today from being unwound by a future rogue regulator. That's pretty strong.
It was a spirited statement. And the long version of that is very similar. But I do think that, that's the concern of a lot of people, right? And including, to be clear, like the biggest investment banks. Because what they worry about is, does it make sense to treat, crypto, tokenization, blockchain as something that if they spend a lot of money in it in the next 2 to 3 years, they're going to have to spend a lot of money unwinding in the absence of a real legislative policy framework. And so, however, whether the banks are fighting with the crypto companies or vice versa, it is in everyone's interest to understand whether there will in fact be some kind of durable legislative framework over which people can quibble, sure, as folks will always do, versus this kind of, depending on who's in charge, you're in trouble or you're not in trouble. That's a very hard way to run a business.
Of course. We're talking with stacy-marie Ishmael, Senior Executive Editor at Bloomberg News. Let's go back to Jeff Mason. He's in our D.C. Bureau. Of course, he's Bloomberg News White House Correspondent. Jeff, we do see folks there in the Roosevelt Room at the White House awaiting the president. It's going to be interesting, certainly what he says about crypto, but there are reporters in the room. They're going to be able to ask questions. There's going to be a lot that potentially the president could be asked about.
Yeah, there certainly is. And a couple things that come to mind. Number one, let me just tell the audience a little bit about what it's like to be in that room. That's the Roosevelt Room, which is right outside the Oval Office, and the president will come in there and, as you say, make remarks, and no doubt invite the people on his right and left to also make remarks. So this is not only a platform for him, but it's also a platform for those executives to say what they want to say that has a message for important people in their industry, but also for him. And that's an opportunity that usually people who come to the White House with these types of meetings will then take advantage of. It also makes me think about one of the meetings like this that I was in, the press pool for. It wasn't the Roosevelt Room, but it was the State Dining Room. And he was surrounded at that one, this is over a year ago now, I think, by other key executives from the tech world, Mark Zuckerberg, Bill Gates, and others. And what it makes me think about now is that the president likes, A, to have influence there, but B, to be surrounded by them and to show that he is in the mix and that he is listening, and that in some cases that he is being buoyed up by those people. But back to your other question, Carol, about what he could be asked about. The president did take some questions out on the South Lawn earlier today, but there's always more to ask him on things like Iran, certainly on this topic too, with regard to crypto and what he has to say there, but also about the war and the other news of the day.
And we should point out that as we continue to look at this live shot awaiting the president to step up to the podium, we are noting Vlad Tenev is there of Robinhood Markets, the CEO and co-founder there. The Winklevoss brothers are in attendance. We also see Brian Armstrong in attendance, just looking around in terms of some of the individuals. And we'll see whether it's all about the president speaking or whether other folks step up and actually make some comments as well. So as soon as the president begins speaking, we'll take you there live. I mean, I don't know, Stacey, when you see a gathering like this, it is, you know, you're invited to the White House to meet with the president. That automatically shows that this is a priority for the White House.
Yeah, I think at least from a pure sort of optics, you know, the president of the United States has a very busy calendar. So getting a meeting with him, particularly for, you know, these visiting dignitaries, as it were, is important. It's also not the first one, right? There have been several of these, and we still don't have clarity legislation. And I think that's kind of part of, you know, the fatigue almost that people are experiencing. If this were, you know, the very first one where everybody kind of sat around the big table and it was like, here's what we're going to do and we're going to change the world and everybody's brilliant and beautiful. But this, you know, this is, you know, the second, if not the third one of these kinds of gatherings. And I think that there is an increasing demand for that to translate into this very specific piece of policy that folks have been clamoring for.
We should remind everybody the president's already 22 minutes late.
Right, Carol's keeping track.
My team reminded me, they're like, he's not going to be on time. Go ahead, Emily.
Well, I think it's also interesting, Stacy-Marie, to see, you know, all of these executives from an industry that was built on, you know, anti-government ideals and decentralized systems. Now they're all standing together waiting for the President of the United States to speak.
There is a fascinating tension between the invention of Bitcoin by whoever you think invented it, but the invention of Bitcoin and the white paper being very explicitly a rejection of like sovereign fiat control to this kind of, we desperately need sovereign fiat intervention to make this thing happen. But, you know, in a different way, that's almost always what happens if you want to get to like asset class maturity, right? It's like at some point you can play outside of the rules for a very long time, but there's so much more money within the rules that I think that's the trade-off that lots of people have had to look at.
I want to bring into the conversation, we're talking with Stacy-Marie Ishmael, Senior Executive Editor of Bloomberg News. We also have our Jeff Mason. He is, of course, Bloomberg News White House Correspondent. And we also want to bring in, joining us, an interesting story that's on the Bloomberg, Cristiano Lima-Strong, Bloomberg Government Senior Capitol Hill reporter. Good to have you in the mix as we wait for some comments by the president. We will take everybody live to the White House. Cristiano, you put out a story about what Democrats are kind of waiting to do if there is a change come midterms and they have more say in the legislative process. So tell us about what you found out.
Yeah, that's right. I mean, a lot of the focus we've been hearing this Congress has been on legislating, trying to enact the clarity framework that you guys have alluded to a few times, which the president has been a big champion of. A lot of the people that you're seeing in the room have been pushing to get across the finish line. But if control of Congress does shift over to the Democrats, either chamber, we're likely to see a much bigger focus on oversight, and in the crypto sector in particular, digging into the president's connections to the crypto sector. So I spoke to a number of key Democrats on some of the committees that could be leading these efforts, and they said that this is really an issue that's top of mind for them. They want to hear more about some of the Trump family business in crypto and their dealings with one royal from Abu Dhabi that's been reported. They want to dig into some of the president's pardons of major crypto moguls that have come down in the past year. And certainly they're not willing to just take the president at his word that he is just leaving this business to his family and that there's no involvement. So I think they're going to have a lot of questions if they are able to reclaim their gavels and try to have some more tools to get answers to these questions.
Jeff, come on back in, because conflicts of interest with this White House and this president, it's been brought up before. This is not a new, certainly idea, whether it's crypto or something else. But a change in the midterms could potentially make it a little bit more uncomfortable for this president. Sure.
In part because of the consequences of what may happen with those midterm elections, for sure. I mean, if the Democrats end up taking control of the House and or the Senate, but certainly if they get one, and even more so if they get both, then they will have the power to start a whole slew of investigations, which they will certainly do. And no doubt one of the focuses of those investigations will be these conflicts of interest. The Democrats have certainly signaled their displeasure or concern or questions about the president and his family's financial interests. There's a whole lot of other things on that list, but those, I think, are very clearly at the top. And the White House will have to face those types of probes if Democrats win.
Stacey, you've been nodding along as Jeff spoke and also as Cristiano spoke, as we await, again, many times we've been waiting for the president to make some comments, and we'll see. There's not necessarily going to be anything definitive unless there is that explicit comment, right, when it comes to the Clarity Act.
I mean, I think it's going to be a vote.
You do.
Like that's the definitive thing that people will really need. Like, is the Clarity Act going to become law? Is the question. And I think we had the previous meetings, some of the previous meetings around this were about like the Genius Act and like stablecoin regulation. And like, yep, that happened. That there's now a structure for understanding how the stablecoins that are, issued by US or international entities are going to be handled. It gave, no pun intended, the clarity that part of the industry wanted. The fact that this is still a very open question this much time later is really frustrating. One other point to what Jeff mentioned is there was an executive order relatively early into President Trump's re-election tenure around some kind of Bitcoin and digital asset reserve, right? So there was this.
That's right.
One of the things that was like driving those prices in that first January was the idea that perhaps the White House, perhaps the United States would become like a net hodler, as it were, of Bitcoin and other digital assets. And that also does not have any kind of legislative framework behind it. The Treasury, the Fed, and others have not made any particular moves in that direction beyond comments that suggest they're not trying to sell. But, we'll see.
We shall certainly see, and we'll see what the president ultimately says. But a lot in terms of the backdrop and what we should be watching out for. Our thanks. Stacy-Marie Ishmael, Senior Executive Editor at Bloomberg News. Our Jeff Mason, of course, there in D.C., and also Cristiano Lima. This is Bloomberg.